and welcome to this modify for this strategy. Here we'll be putting everything we have learned together and extras, so let's dive straight in. The H4 time frame. Now the H4 time frame, this is for intraday traders, day traders. We choose this time frame reason because it gives us the main moves clearly, what is happening, and it avoids those noises, those messy distractions that occur on the lower time frame. So the next is analyzing. Why analyzing? Not in any point should you cut through price, not even the wicks. This is to make sure that your analysis is on point. Now you may want to make price look the way you want it, have it in your brain, but no, you have to trade the market what it is doing and not what you want it to do. So as long as the pattern or channel you're seeing looks exactly like it and price is doing that, you can execute, but do not cut through price, not even the week. Now the third point is this time frame shows previous day turning points, major turning points, making it easier to spot recent highs, real highs and lows for entries. Yes, if you go to the H4 time frame, comparing it to other lower time frame, well, we don't use lower time frames here, other lower time frame. The H4 time frame is the least time frame for this strategy. You would see it work a lot of time. Now the third point that said that this time frame helps in showing the previous major turning point. Yes, it does, making it easier to spot these recent highs and lows. When I mean major turning point, where did price end yesterday? Here, right? The major turning point, price ended here. So this was the major turning point, and mostly you can see this clearly on H4 time frame compared to other time frame. Now in this point where we had a sell, if you observe the market very well, you'd see that here was a major turning point as at when this trade was on. Remember, do not cut through the wick. We're drawing our trend line from the tip and not cutting through price. Now price went up, went down, went up, and this day was the start of the next day, right? This was the major turning point here, and this was the previous day major turning point. Please, this is mostly recognized without noises and distraction on the H4 time frame. This was the major turning point, and this was a major turning point, and if you see, it is recognized clearly on H4. That is why H4 is a very amazing time frame so far. It spots the recent real highs for entries. Now here also we are able to spot your SL and TP levels amazingly well. For intraday trades or position trading, you will see that on H4 time frame you can spot your stop loss and take profits, because it will give you those recent last highs and last lows clearly, compared to other time frame where you can be distracted by false moves. So this was the last place, and we can just put an extra 20 points to it. You see, that was a 1:3.6 trade, and you spotted it. And here on this pattern that we saw, we have been seeing here, watch, let's say you took price around the zone, you take profit, last low. You can also decide to wait for the pattern to expand to this point. Yes, so let's say our take profits last low, and then our stop loss is last high. Remember, last high plus 20 points, that is it. So with H4 you're able to spot where your stop loss and take profit is ought to be, the exact point where you can give price breathing space to do what it wants to do. That is it for this H4 time frame. For any intraday trading, you can spot your SL and TP levels perfectly with H4 time frame. And if you're swinging, you're also able to spot in your daily and weekly time frame. But on H4 for intraday is perfect for spotting SL and TP levels without false highs and lows. Now, the truth about this H4 time frame, the more you go and you realize that the H4 time frame gives you a clearer perception of the market over time. I've seen it a lot. I've seen it a lot trading this approach on Dow Jones especially. You would get to see a clearer perception of the market. You get to understand what the market is doing. Where is it going? Is this a false move? Is this a you know, this H4 time frame is giving you every single thing, and most times it makes things easier for you. So it gives you a clearer perception of the market. It makes it easier for you to understand the market over time. Yeah, with this strategy, compared to others, in the long run, you'd understand it better with the H4, the daily, and the weekly. Now let's go over to the next slide and see what is over there. So yeah, non-negotiable, the TP or SL. Yeah, so what does this mean? It is not negotiable once you place your trade. For example, here, you place your trade here, you take a sell, your stop loss, your take profits. It is not negotiable. It is either your trade hits your take profits or your trade hits your TP. That is it. That is it. That is the order for this strategy. It is either your trade hits your take profit or trade hits your stop loss, because when you want to check your overall profitability, the only way you can know this is if you've been holding your trades to target or not. To know your overall profitability is by knowing if you've been holding these trades to target or not. If yes, you would know if you're overall profitable or you aren't. So let's say for instance, this trade was taken around here, right? The trade was taken around here. This is your stop loss, last high plus extra 20 point. Let's put it 60. Okay, now this trade was taken around here, and the major objective and the major rule for trading this strategy, your trade must either hit take profit or stop loss. That is it. Do not fear. Either you hit your take profit or stop loss. It's not negotiable, because one trade affects the other. If you are going to check your overall profitability on the long-term view, you'd see that if you hold a particular trade target, you hit your risk to reward ratio, your next SL is not going to get to you. And if you keep hitting your take profit, your stop loss is just going to be there, and it's not going to affect you psychologically. When you check your overall performance, you'd see that you're overall profitable. So that is why the stop loss and take profit is not negotiable. That's why you need to analyze and see what the market is doing before you execute your trade. Now, the next thing is hold, be patient. Now, reason because that's the only way you know. Yeah, well, I've said this, and that is what I mean. You need to hold, you need to be patient. You need to hold and you need to be patient. As long as you analyzed, you spotted these patterns, you need to be patient regardless of what the price would like to do. Faking out, creating fake out wicks and the rest. You need to hold to your take profit or your stop loss. Your take profits, you need to hold. Now, the next is giving price space to breathe, because fake out exists. Now, there will be nothing to panic about with holding your trades when there's space for price to breathe. You know, everything is interconnected to each other. Now, if you watch out this chart, you'd see that this trade was a 1:2.4. Now, the reason why I told you our last high and our last low is our take profit and stop loss zones. Now, the reason why is because you can easily just say every strategy you're trading, you're adding extra 50 points or whatsoever. But no, with this strategy, because we are trading significant structural zones, we need to recognize the highs and lows, and that is where we use for our take profit and stop loss. And if you observe this, by using this and adding extra 20 points in case price goes to test that place again, you're not taking out of the market. By doing this, you're giving price space to breathe. And the reason also is that fake out exists. If you start practicing, you'd see some fake out in the market, and the only reason for this fake out is to test you and to take out some stops of some other strategy that doesn't know about the secret I'm spilling with you now. But when you give price space to breathe, you wouldn't panic holding your trades. You wouldn't panic. You're just going to set your trade and forget it. It's either you hit your take profits or you hit your stop loss. That's why you need to do a good analysis. At least spend time on the chart and know what price is doing. Know the market, observe the market, and learn from the market. Now, I've explained to you that our TP is last significant high or low of price, while our SL is last high or low plus extra 20 points. Now you may want to ask me, why are we adding extra 20 points to price for XL? This is because now price may know that depending on your setup, price can want to go test your zone. Like this, there was this trade that looked just like that. Let me show you. Yeah, this, watch. Price went to test that zone. I can remember vividly. We took a buy around here. This is a double bottom. We took a buy around there. Let's clear this. A buy. Remember, the market is not perfect. Yes, it is not. That's the real truth. And also, these patterns are not always picture perfect as it is in your brain. I want you to observe something here on this market. This was a double bottom that we took this trade. Our style gave us this entry. It was a clear move, which we clone. Remember this double bottom style well. Now, why I'm telling you for this, the reason why we're adding extra 20 points to price is that the reason why we're adding extra 20 points to price, like for example, watch what price did here. We took this trade around here, right? And then our stop loss, let's say you didn't add extra 20 points. See what price did. Observe, watch. Price went to create a retest. Price retested it, and it was done purposely because you know most traders place their stop loss around that zone. Now I'm giving you this. This is a hack, and all you can do for us is the community is to stick and practice to it. Stick and practice to this strategy. You would see amazing results for sure. Now let's say there was no extra 20 points. You'll be taken out of this clean setup. You'll be taken out because you put your stop loss at the last low, and see what price did. It moved almost 1:4. But let's say you added extra 20 points to this trade. Let's say 130 plus 150. Watch. Did you see that price respected you? Price respected you for giving it space to breathe. Now that is it for, and your take profit is going to be here. Well, I can tell you that you need to hold your trades to TP, because this trade hit TP at the 11:59 hours. That was like 5 or 3 minutes before the market closed that day. That was when Dow Jones pumped this much. So you need to hold your trade regardless. Patience. You need patience in this market. The next is I've explained to you your take profit, last high, last low of price. It also may not be the last high or last low. If you're trading a pattern, it should be where the next, where you forecast the market to get to. Now let's say you're expecting a double bottom, right? When price gets to this trend line, the moment price hits this trend line, your take profit should be around there. You can exit the trade, because that is a pattern you're trading. You do not want to leave it till wherever it's going to anymore. This is a pattern you're trading. Now the moment it gets to this point, you take your profit. So the next point is, I've explained our stop loss and the reason why we need to add extra 20 points to price. The next point is, I'm going to give you a lot of trading nuggets, and this is specifically for this approach. I have observed it by actively being in the market, and you would observe it too. I want you to be aware of it. I know you would value these tips, because this is going to help you along your trading journey, especially using just this trading approach. Now, the first is, trade what the market is doing, not what you want the market to do. This is a very important, vital point, and if you watch, I've been saying this over time. You're not gonna wait or want the market, the perfect setup. You're not gonna want to make sure that you draw your trend line to look how it is in your brain, in your head. No, but if you see the market creating that pattern or creating something that looks exactly like it, you know what? You execute, because the market is doing that. That's what the market is doing at that moment, and not what you want the market to do. Because if you're trading what you want the market to do, you would always want that perfect setup. You would always want to force price, and thereby you may be forced to draw your trend line in between the wicks. But when you trade what the market is doing, you would see everything clearly. Avoid excitement. You would see everything clearly. The second point is, perfect patterns are not always picture perfect. If it looks exactly like it, trade it. Yeah, I've said this over time. The pattern is not always picture perfect as I draw it here, but when you go to the live market, you see it looks exactly like it. Why not? If it looks exactly like it, execute, because the pattern is a major tool in this strategy. Now, for confirmation of a pattern, you can place limit order, or you wait for a breakout before entering. Yeah, so let's say you're trading a pattern, and you, after every confirmation, you see a candlestick aligned with the structural zone and the confirmation of the pattern. You can either choose to place a limit at a zone. Remember, a pattern I'm talking about here is something like a bull or a bear flag. For example, let's go to the chart where a bull flag occurred. Watch here. You can decide to place a limit at these breakouts here. Let's place. When price breakout, take me in. But now you'd be risking more. When you do this, you'd be risking more. You'd be risking more, far more, or you'd probably need to reduce your risks. Do you see something like this? That is it. That is the only disadvantage, but you are sure that is a clear move. Something like this. Example, with this bull flag that occurred here, as you can see, when price pumped upwards. Let's say you didn't take this thing right in here. You can wait for price to do something like this, and your trade will be taken here. Watch. Your trade will be taken here. Okay, now your stop loss would be wider compared to if you took it inside the zone, reducing your risk to reward, but giving you a higher certainty and probability of this trade. For example, this, you would see a lot happening. You would see a lot. Remember, do not cut through price, please. Do not cut through price. Now, when price pumped, guess what price did? Price went down and went upwards again. And from here, see what price did. You can either decide to take this trade here with a very lower risk, because you took it entry, you risk more. This could be your stop loss. You risk more. This could be your take profit. Or you wait for the breakout around this zone, and you would have to reduce your risks, because most of the time, not all, but most of the time, when this market breaks out impulsively with a bullish or bearish momentum candle, the market is likely to move upwards, very likely, especially when the higher time frame is bullish or bearish. Very likely to occur. Now, the next point is, we have talked about reason why you need to place a confirmation, place a limit order to wait for the breakout before entering, thereby reducing your risks but increasing your certainty. Now, you need to be consistent in your risk per trade. Yeah, regardless of your risk to reward ratio, because all trades may not give you equal risk to reward ratio, but now it is your choice to choose what risks are you risking, regardless of the risk to reward ratio. Now, in this point where you have a lower risk and your account, you're risking 1% per trade, you still risk 1% per trade. And in the point where you're having a higher risk, something like this, your risk is more, something like this, you watch, you still risk a 1% of your account. If you observe, a lower risk here and a higher risk here, okay, but you still risk more, you still risk equal, you still risk equal. Remember, this was also a pattern, and if you took this trade, this was a very clean setup. Please do not cut through price. Do not cut through price while cloning. Now, you took this trade around here, this place, watch, with extra 20 points, 180. This could be your take profit here, 1:3. You see that this is 1:3, this is 1:3, okay, this is 1:3. This trade, some trades can be 1:2, but make sure you keep your risks the same. Be consistent in your risks per trade. That's all I'm trying to say. Now, do not overanalyze. Keep it simple. Regardless if your previous day was a win, you may get excited, but it is advisable to stay calm in the market so you don't get blurred by excitement and you don't see what's happening in the next trade. Do not overanalyze. Do not try to force the market. Make sure that you have a clear, clean setup before entering the market. Keep it simple. Keep it simple, precise, and straightforward to the point. Do not overanalyze. And the third point is, trade every time you see a good setup, regardless of news. Well, this strategy, it doesn't matter the day you have a good setup. It can be during a CPI, FOMC, or NFP. It doesn't matter. I mean, this news are even when you'd have the opportunity to make quick money within a short period of time. This strategy is not, you're not trading during news or whatsoever. You trade if you have a good setup on a news day. Execute, because the news only creates volatility and not the main direction. So if you have a good setup, regardless of news, trade. You can trade any day you see a good setup, as long as with 100% confirmation entry. You get, so you're not saying I'm not trading on Monday, I'm not trading on Tuesday. Any day you have a good setup, execute, regardless of news. Here in this trading approach, we trade news. We don't even look at the news because we are purely technicals, and most of the time the fundamental is in line with the technical, as long as your analysis is good. Well, the next point, our next nugget, is start early to analyze, execute when it's time. Well, it's advisable to go into backtesting, okay? Backtesting, whereas you you take some time to flash back through the trades you took, and after then the next day you start early to analyze. You can analyze at least 2 hours before the time you're executing your trades. Analyze maybe probably 30 minutes or 1 hour, and then you leave the charts and wait at least an hour, and then the next hour you analyze again. You go through the charts, have a confirmation. Now have confidence. The reason why you need to analyze early and not just come on the market and jump into the chart is because you need to build your confidence in that analysis. So when you analyze early, you are sure coming through the chart again, you see the same thing. And then you execute. In this strategy, it's advisable that all trades are executed 11 a.m. This is to have a 0 to no drawdown or a lesser drawdown. This 11 a.m. price is most certain to start moving in your direction. Yeah, I can tell you for a fact. You can execute anytime, especially if the current direction of price is in your direction. Yeah, let's say you want to buy and price is currently bullish. Like here with this trade, watch. This was around 9 a.m. So you saw this buy coming in. Okay, if you wait, if you can execute here because the price is already looking bullish, right? You can execute here, or you can wait till your confirmation time and execute here. So the only time where you can execute before 11 a.m. is when price is currently in your direction. When price is currently in your direction, you can execute before 11 a.m. But always remember, start early to analyze, leave the charts, come again, build your confidence in the trade. This would enable you to hold it regardless of nobody's idea should influence what you see in the market. Okay, so the next nugget point is history repeats itself. Well, this is said almost everywhere, and I'm sure you know about this, that history repeats itself in the market most of the time. Now I'm going to show you something that you'll be amazed it happened recently. Well, look closely at this chart. You would see what this market did. Watch. This market went up here, moved up, dropped, now went up again, right? Now it's now sold. This was why it was an extra confirmation for our buy trade. When I saw the market going up, I expected this was what was about to happen. Okay, this was what was about to happen. And when price went up, price went down. When price dropped, this is the same pattern. This is history repeating itself. And when price dropped, now price pumped, expanding this. Something like this again happened in the market. That is what happens when you pay attention to details in the chart. The market will reveal itself to you. History repeats itself. Please be aware of that while trading. Be aware of that history repeats itself. I'm going to show you something again. This is another pattern that occurred, this bear pattern. Watch that price created this bear, and then this bear pattern created something like this again, giving the same move. This was what happened. The price giving the same move. That is history repeating itself. I mean, just pay attention to details. That's all. Pay attention to details. This was also another reversal pattern. This was another reversal pattern, kind of an expanding wedge, falling triangle, expanding triangle. Watch what happened. I told you that price usually, this is a reversal pattern. Watch closely. It's falling down, then price comes here, drops, goes up, and then tries to play around your trend. Remember, price didn't just drop like this. Did you observe? Yeah, price played around and gave this exact leg. Watch, price gave that exact leg. You need to outline what you see. Remember, you need to observe. Now when price gave that exact leg, if you saw this trade, you would see that it gave about 3 confirmation. After dropping, it's consolidated near the trend line. It's created a double, a double bottom. Price created a double bottom. Observe, it's created a double bottom before this buy started. So let's say after creating this double bottom, you took this buy around here. I took this trade, you took this buy around here. This move was quite quick. You took this buy around here, and then this was your take profit. Did you see? One is a to 2.5. This was a clear clean trade. This was a clear clean reversal pattern that played out also in the market. So the more you go into this, you'd see it occur a lot. You see history repeating itself, and you'll be amazed. History repeats itself. They say it a lot, and it occurs a lot. History repeats itself. I repeat, history repeats itself. So I'll be showing you one more. I think I saw one more around here. After this happened, another happened, which is what I'm about to share with you. How history repeated itself. Now, when history is repeating itself, you'd see that it's occurring as a pattern. Yeah, it's occurring as a pattern. Watch what price did here. When price dropped here, respecting this zone, played around our trend line, now creating a reversal pattern for us. And you need to be aware of this. What did it do? History repeat. Now, when history is repeating itself, it is mostly occurring impulsively. Exactly impulsively. Most times more than it was. You see, I want you to be aware of this a lot. I want you to be aware. That's why you need to understand the patterns that has been shared with you, because these are your tools in this market. This is the only way you would win with these tools, trading this approach. Now, history repeats itself. Respect it if you have seen it before. Yes, respect it if you have seen it before. If you have seen, now I did something that happened with a candlestick. Also with candlesticks, history repeats itself. Now observe here. Observe what occurred on this chart. You see how price dropped here, right? Price dropped. Now go here and I will show you something of history repeating itself. They look very similar, very similar. Observe, price dropped, created a tightening candlestick 3, and watch, see, price created a tightening candlestick. Now price created that same leg, very similar, very similar. Watch, price created that same leg. Now if you observe, the previous leg looks so much alike. Watch this first pattern. Watch this first pattern. You see this here, this week it created the same thing occurred here. The same week occurred here before this tightening and this drop. So if you've been in the market and you saw something like this, you saw this tightening, and you also stayed in the market and you saw something like this again, you saw this tightening, I mean, you should be sure that that is a reversal, that is a correction that is occurring. And even if you don't know the pattern, just be aware that history repeats itself. This moved like this is going to happen again. So when you see something like that again, this moved like this is going to happen again for sure. That is history repeating itself a lot. This moved like this, corrected, it repeats itself most of the time. It may not repeat itself immediately, but like here it happened on 6th of February. It's happened on 6th of February with this pattern, and then it didn't repeat itself immediately. It took some time, after how many months or whatever, it created a tightening and then dropped. Now it can still happen again in the market. Now that's why I told you, as long as you've seen it, respect it. That is it. As simple as that. As long as you've seen it, respect it. Now always remember to buy bottoms, sell tops. That is just the secret to trading the double top, double bottom, buy bottoms, sell tops. So I want you, all I just want you to do is practice. Make practice, because practice makes perfection. And if you have anything, feel free to reach out to me, and I'll be glad to be at your service and explain and trade with you and explain this trading approach further. Practice, because that's the only way you'd see this magic in this strategy. Okay, so I'm glad you made it to this point, and if there is more to update, I'll be updating it. Please stick to our community, and good to have you, and I'll see you again in the next time. Thanks.